Welcome to the Investment Banking Leaders Podcast, brought to you by the Investment Banking Leaders Club, your exclusive access to the industry's most successful leaders. These experts have closed thousands of deals, generating hundreds of billions of dollars, and they're here to share their strategies, insights, and leadership lessons that can fast-track your career. But the learning doesn't stop here. Join the Investment Banking Leaders Club at ibleadersclub.com for even more exclusive insights, leadership frameworks, and career-accelerating resources and events. Thanks for joining us, and best of luck on your growth journey. So welcome to today's episode. Today's guest is a true example of what it means to build an impactful investment banking career differently, from starting in PE and early stage ventures to becoming employee number 3 at a small M&A firm, to ultimately buying that firm, navigating it through the 2008 financial crisis, and building it into one of the lead niche players in insurance M&A. Jason Murgio is the CEO of M&A Services Inc, and his journey is not the typical Wall Street path. What makes Jason's story so compelling is not just what he's built, but how he's built it. He's taken a really entrepreneurial approach to investment banking, hiring operators instead of traditional bankers, prioritizing long-term relationships over transactions, and focusing on understanding the why behind every deal, not just the numbers. And today, Jason leads a firm that consistently punches above its weight, completing 15 to 18 deals a year with a team of around 16 people. And in this conversation, we'll go deep into what it really takes to build a business in investment banking, why most people misunderstood origination, and how thinking differently can become your biggest advantage. So Jason, thanks for joining us, and welcome to the Investment Banking Leaders Podcast.
Thanks so much for having me. It's an honor to be here, and I look forward to spending time and answering the questions, and appreciate the opportunity.
My pleasure, Jason. I know it's been a while to put this together, so super excited to have you on today. As I mentioned, your career didn't follow that traditional IB path, and you started in private equity and then even moved into the entrepreneurial ventures quite early on in your career. So if you look back at that, what is it about those experiences that have shaped the way you think about business today?
You're right. I didn't come up through the traditional investment banking route. I came up through building and investing in businesses, which really changes how you see value. I think very early on, I realized that numbers are only part of the story, and understanding the why behind a business is the real edge in shaping deals. And from there, that's how I built our firm. It's less about running processes, more about helping clients make the right decision. And value is created in operations, not just financial engineering. So understanding the business first, the deal will come second. And I think that my early positions, both at an insurance company and a private equity firm, all help frame that.
That's amazing. Yeah, I can definitely see how that experience really involved in the businesses, and as you said, the value and the upside can have really given you a great foundation. I think one moment that stood out when we chatted was that you helped your cousin raise capital and then successfully sold that business within a couple of years. What did that experience teach you about deal making before you formally were involved in investment banking?
Yeah, so that was in right before 2000s. My cousin started a technology company and asked me to get involved, help raise capital, some of which came through the insurance sector where I'd had experience. And that was my first life cycle deal, like raising capital, growing, and then selling it. And when you go through all those phases, I think it gives you a different perspective. And what stood out is buyers weren't just focused on the numbers. They cared about the story, they cared about the people behind it, and how sustainable the opportunity was. So it taught me really early to think about the exit while you're building the business, not when it's just time to exit. It was about learning it's more than just numbers. It's the people behind it. It's the story. It's the credibility. And then the positioning of the opportunity.
Great. Yeah, no, again, I can see why that gave you such a good foundation, and the story, thinking about the exit before it's upon you, great foundation. And as I mentioned, I know you joined M&A quite as employee number 3, I think we put it, which is very different from joining a large institution that's already well worn. What did you see in that opportunity that maybe others might have overlooked?
I saw opportunity. I saw a lot of upside versus going to a bulge bracket bank and kind of working through the process there. At a smaller company, it's much more entrepreneurial. And I think my whole business career has been entrepreneurial. So I saw it as upside to where you could shape culture, You could build relationships directly. Others may have seen risk. I saw opportunity, ownership mentality, opportunity. Like I didn't know when I stepped in as employee number 3, one day I would be the owner of the company, but that certainly was in the back of my head to say, I have a chance to play a major role here versus just being another employee in a team of people. And of course, with the smaller companies, there's no bureaucracy. That made it easy and the much faster learning curve. So I saw an opportunity to build something rather than just plug into a machine. And also, I think having spent some time at an insurance company and a PE firm, at a smaller firm, you're closer to clients, you're closer to the decisions. And me personally, and even our team that has worked with me, you develop judgment much faster. So it's a bit of a higher risk, but with much higher upside in terms of learning and eventually ownership.
Yeah, I love that. There's so much of that story that resonates with me. I think my path, I'm cut maybe from a similar cloth in the sense that I joined Altrum as one of the first couple of employees in the UK, although we were developed in other parts of the world, and saw the same as you, that opportunity to be empowered, to seize opportunities, to grow quickly and get more exposure across many parts of the business. So yeah, I can definitely resonate with that. And it's clearly worked out so well. So congrats on all the success. If we fast forward a number of years, we talk about you moved back to New York, you took ownership of the business, the P&L, and then ultimately the whole firm, I think just before the financial crisis, if I remember rightly, which must have been a huge moment. What was going through your mind at that time, and how did that period shape you as a leader?
Sure. Yeah. First going in '05, coming to New York, that was tremendous opportunity. A lot of capital had been raised after Katrina, Wilma, Rita in the insurance sector. So there was lots of opportunity to put deals together, new entrees into the market. That was a huge, exciting moment. And of course, from '05 to '08, the growth that the firm undertook, particularly being positioned in New York, where most of those deals were occurring, was phenomenal. In '08, in May of '08, when I closed on the company, we had a great pipeline of transactions. And I thought this would be a rather simple process and just keep doing what we've been doing for years. And of course, soon thereafter, the financial crisis hit and it impacted everybody from Main Street to Wall Street. You really had to rethink, and there was no playbook. When I bought the company, there wasn't like this drawer that you could open in case of emergencies. It was, you had to figure it out. Forced me to become a capital allocator, a leader, a risk manager overnight. And I think the biggest takeaways was the down markets exposed who actually understand their business. It's easy when things are going really well, but when things take a turn, how do you shape the business? How are you going to think about it? It was trial by fire. Like I said, there was no playbook. You had to make decisions quickly. You didn't always have all the information, but it forced me to really understand the business and lead through uncertainty and made us more disciplined and focused for the long term. It was a challenging time, but I think it was a formative time as well.
Yeah, turning that challenge into education, clearly with what you did so well. And it's great to see how these challenges can provide opportunities, particularly for growth. So thanks for sharing a bit more about how you got through it. And I think you mentioned to me as well that actually during that period in the downturn, you actually even leaned into hiring talent while maybe others were pulling back. What gave you the conviction to invest when the market was so uncertain at that time?
I think if you're fortunate to have the resources and to have the determination to invest when others are forced to sell, is just it's a great opportunity. The talent dislocation to me during the crisis was really equaled an opportunity. And I think where the conviction would come from, insurance isn't going anywhere. We're in a very regulated, stable environment. Everybody needs insurance, whether it's personal insurance or it's commercial insurance. So there's that long-term demand. And I did believe the cycle would normalize. And once that cycle normalized, that talent wouldn't always be available. I saw a unique opportunity. Great talent was available that normally wouldn't be. And our view is insurance is resilient, and the cycles would pass. And I think I decided to lean in when others pulled back a bit.
Makes a lot of sense. Yeah, I can understand that. And as you say, with the resilience of the industry, positioning yourself for growth when it comes. So super smart. And when you look at the business today, as I said, somewhere around 15 to 18 deals a year, if I'm not mistaken, a tight team with longevity, a strong position in a niche. What do you think has been your real driver of growth over time?
Good question. I think the volume has come, but we never pushed for volume. We really pushed for positioning of the firm and then precision, I would say, and concierge level service in what we provided to our clients. So that's really, what I think we looked for. Obviously, the deep niche industry focus in insurance, right? That's key. That's what we do. We don't deviate from that. And the long-term relationships, about that a bit, having those long-term relationships and fostering them and nurturing them over time, I think really led to a driver of that growth. Also, we're as a boutique, and we have, as you mentioned, a rather smaller team. We have a senior level person involved on every deal, and they're not just there for the intros. They're there from the engagement all the way to closing. I think that separates us, whether it's myself or Chris Hughes in my firm or Paul Prokops, Dan Baranski. You're always getting a senior person that's got 15, 20 years of insurance experience and insurance deal making. And again, not always from an investment banking background, from an insurance background. So I think that's our edge. We're not intermediaries. We're really advisors and partners to our clients.
Amazing. Yes, that makes a lot of sense. I like that. I like that coin. You said position and precision over volume. So I like that. That's a good term. I'll use that one. And yeah, I can understand deep special. It seems like the industry itself is going round on itself, and specialism is becoming really big again. I don't know if you're seeing that as well, but a lot of leaders I speak to. So that deep niche makes a sense to me. And obviously more and more are looking at that and trying to carve out these niches and lead expertise.
And that's really important because while our track record is impressive in terms of the amount of deals we've done, we aren't trying to do the most deals. We're trying to be highly relevant in the ones that we do. And I think that's what will ultimately lead to the volume.
Yeah. You touched it a couple of times on, and I touched on it as well, is typically you don't hire traditional investment bankers. You've hired people from within the insurance industry, insurance experts, if you will. Why has this been such an important part of your strategy?
I think, operators, really understand the business because they've lived it, right? They've sat on that side of the desk, whether we have some of our team members come from insurance carriers like myself, others come from insurance brokers, and we do obviously both work with both of those segments. They understand how the money is actually made, what risks actually matter in the business, and have sat on that side. So the result is they really have better client conversations and they can be more creative in their deal structuring. So we hire these insurance industry professionals because they understand how the business actually works. And I think it's less about having not been the traditional investment banking background where it's very process driven, right? It's less about running that process and more about understanding the outcomes and how that's going to benefit the client.
Yeah, the creativity piece speaks to me a lot. I hear, particularly in times of instability, geopolitical unrest, a lot of things that we're experiencing more and more, that creativity, that ability to get deals done is so key. So I can see why that would be a big strength. Do you think traditional investment banking models sometimes over-index on execution and maybe under-indexed on really understanding the client and the deal?
I do think a lot of investment banks are driven, obviously everybody is, but we're driven by revenue, right? And I think you need to step back and look at just not executing a transaction, but really asking what is the right outcome for the client. That could mean a different buyer, a different structure, or even waiting if the timing isn't right. The process can be a bit commoditized, but the judgment isn't. And I think that's what's important in how we look at it. And we actually think differently about how we take a buyer or take a seller to market, or we help a buyer find a company. And it's really structured around the client's goals, which isn't just price, but it's just making sure the outcome is greater than the transaction.
For sure. Again, yeah, that makes sense. And understanding is the key that I hear from a lot. So I can definitely resonate with that again. I want to talk a bit about Origination, the real story. We have so many aspiring leaders and leaders, existing leaders listening to this show. So I'm always interested, particularly when I pick up a CEO that's clearly entrepreneurial, a business developer that's built something within the industry, to pick your brain a little bit. That transition from execution to origination is really tough. What do you think most bankers misunderstand about origination?
I think most bankers think origination is selling when it's actually really listening. It's about understanding what someone is trying to accomplish over time and being helpful early, even before there's a transaction. Listening is the key in understanding what their needs are, what goals they're looking to achieve, and it's trust building over time. And I think a lot of investors mistake activity for progress. So it's out there pitching. Pitching is important, but I think being relevant is more important. And I think listening to your clients and being a thought partner with them is really how you build an origination pipeline. And it doesn't happen overnight. It takes a significant amount of time and patience. But as you listen to your clients and understand what their goals and objectives are, like I said earlier, it may be today, while they may want to exit the business, today may not be the most appropriate time if you're listening to their goals and saying, here's why, and outlining some steps they might want to take before going through a process. So I think that's a key part. It's not selling every day. It's out there building trust and listening.
Yeah, I love that. So listening, not selling, really understand those goals and objectives of the clients, be helpful before transactions needed, trust building over time, be relevant over volume again. So lots of great tips there. And I'm sure the audience will really take a lot away from that. I guess you mentioned a few times relationship, it's built over time, it's built over years, it's not an instant thing. How should young leaders think about that timeline when they're under pressure to deliver the results? We talked about revenue being the key. So any
Right.
advice there?
Yeah. Look, the best relationships take years to develop. A lot of our deals came from conversations that started 3 or 4 years earlier. It's a long game, and those relationships compound over time. The best deals are the ones that have the longest incubation. And in terms of advice, I would tell anybody in the space that they really need to play the long game. And I tell all that to all of our people that are starting at our firm. If you come here and you expect success in the first 12 to 24 months, that's very challenging. You can catch lightning in a bottle, but it does take more time. And what I say is build the pipeline almost before you need it. Start reaching out, having contacts. And the effect of that is those relationships will ultimately become proprietary deal flow, but it does take time. And so that's the advice I give our team, and I'd give anybody, is this is not you jump right into a business. It's a long road.
Yeah. And I guess even starting early comes up a lot, and that makes sense. If you wait until you really need it, you're behind the ball. So that definitely goes there. And you shared about really being intentional about staying visible over the years, which obviously makes sense based on what we've discussed. And I think you shared with me conferences, events, newsletters, content has been, some of the key channels that have really had impact for you as you've built the business. And it was a great example, I think, where you shared even a client came back about a newsletter they'd had in their drawer for many years, and that led to a transaction. How important is consistency in building that long-term pipeline, in your opinion?
Oh, it's a key. It's key, right? A lot a lot of people don't realize that having that long-term visibility is important. And this dates back when I joined the firm. I think I was telling you in an earlier conversation, we have a 65,000 member newsletter now. And Hanks, we used to send out hard copies, and what a task that was to get all those to the printer and mailed and everything. Now, of course, it's easier because nobody wants it hard copy, it's digital. But putting that content out and being relevant to your party is very important. And quite frankly, we have had people that have called us up and said, hey, it's now time, we're interested in selling our company. And the question I always ask is, how do you come across us? He goes, I just pulled this newsletter out of my desk. You've been sending it to me for years. You don't think it has an effect because you can't see that dial move every day, but it has been critical. So I think that's the key part, is continuing to stay top of mind with partners, but not being transactional about it. So you never know when somebody's going to need you, and staying visible over that time keeps you being that top of mind.
Yeah, definitely makes sense. And I've seen that when you get the occasional reply email and you look down and the email was sent some time ago, it's nice to get those. But as you mentioned, tough to track. So I almost feel like sometimes it was simpler when you had the print, although harder to execute. You knew it was there, yeah. Whereas the emails now, it's so intensive and so much to sort through. It's a bit tougher. You shared a ton of great tips, I think, here to help. But for someone listening who's currently deep in execution work and is time poor, what are your 1 or 2 top practical tips that they can start doing today just to flex that origination muscle a bit more?
I'd say 2 things. Stay in touch with people regularly without a set agenda. And second is start sharing your perspective, even in small ways. because over time, that's what builds the relationship and the credibility. For us, as we talked about, we send quarterly newsletters, but maybe it's insights. I tend to block time, believe it or not, weekly for 2 to 4 non-transactional check-in calls, just seeing how they are, talking about business, no specific agenda. But really, that starts building your personal brand that's you personally or the firm's brand inside of your niche, is having that touch point.
Yeah, makes sense. And it's not too hard, guys. I know how demanding the industry is, but hopefully you can take one or two things away and get that flywheel going. This is a leadership podcast, so I want to sit on leadership a little bit. Um, you describe yourself as someone who leads by example, stays hands off, empowers people to run with ideas, which I can appreciate must create a great place to work. How would you define your leadership philosophy today?
Yeah, look, leaders are great. You have to have a great team. So you need to hire smart, capable, and dedicated people. But then one of the keys to that is give them the autonomy. Lead by example, set standards, but not micromanage, and create an environment where ideas come from everywhere. It doesn't necessarily has to be leadership's idea. Certainly, we've had several good ideas that have come in from some of our younger team members that have been quite creative and thinking outside the box, and rewarding them for having the courage to bring those forward. So personally, I try to hire smart people and then give them room to operate. Like I said, set the standards and lead by example, but let them take ownership too. That's where you're going to get your best ideas and long-term growth from the employees and the team.
Amazing. Yeah. A lot of that it resonates with me, and it's certainly the way that I try to lead. So again, a lot of similarities there that I can grab onto. And your firm has incredible tenure. I know that people don't leave, that you really have people that have come in and stayed and grown with the business. And many of the things you've just mentioned is probably why, but what have you done differently to build the kind of culture that develops that longevity?
I think people stay because they're building something, not just doing a job. We've been intentional about creating a long-term environment where our team members can grow and have a real impact. So they stay because they see long-term upside. And I think we don't have the churn mentality because people are here building careers, not just a job. And when you're building that career and you have the relationships that you've invested into, and you have management that allows you to foster your own ideas and be entrepreneurial and supports that, that really sets you up to it's not a job, but it is a career. And I think all our team members can see that entrepreneurial side of the business, and each of them bring their own piece to that. When you foster that, and being a small firm too, I'd say we don't have a lot of politics and bureaucracy and things of that nature. So all of those things create a really positive culture, and that culture is one that people don't want to leave.
It's clearly paying off. So again, congrats on what you've built there, and best of luck as you continue to grow.
Right?
You emphasize patience when developing talent. You said earlier on that sometimes people come in and they want to be doing deals in 12 to 24 months, and obviously that patience is important. And I think more and more in the world now we expect quick successes, right? I think that's just the way things have evolved. So how do you balance pushing people to grow while also helping them stay patient?
The key is setting expectations. We talked a little bit about that
Mm.
earlier, right? For all of our people that have come on in the younger generation of the firm, it's really setting the expectations for them that this is a long game business and they need to have the patience, and it's easier said than done. And while we have, as we were just talking about, people tend not to leave the business, the only ones that have ever left it are ones that just didn't have the patience. And we had a couple of those that happen over time. But it's getting them to understand the runway that needs that they need to go through in order to get there. But also at the same time, give them responsibility early. A lot of our younger team members are on the phones with our biggest clients, and we set high standards and give them that responsibility. But it is a difference between just being an analyst that's sitting there crunching the spreadsheets or redoing a deck to actually client interfacing, being on the phone, being involved in getting NDAs and things executed, and learning that process early, and being part of all the senior management calls to where we're discussing process, strategy, insights, because they're taking it all in. So patience matters, but giving responsibility so they can develop is what allows them to build that experience.
I think it's
Sure.
fascinating industry, investment banking, right? Where you have this exposure almost early on to great entrepreneurs and great businesses. So fueling that exposure as you're doing seems like a great move. And again, I guess setting expectations must help with that patience, as you mentioned too, really understanding what it takes. And it's not an instant win in this people-driven business. What about market and opportunity? We're in a market today with a lot of uncertainty. We talked about that briefly earlier, geopolitical risk, interest rates, shifting dynamics. You mentioned deal making has become more precision driven versus that broad approach, that volume approach. How has all of this going on changed the way you think about transactions?
Yeah, certainly over the last 2 years, right, we've had a big shift, both in particular at a macro level, right, in the economy, and that is a trickles down and has an effect. So what we're seeing today is not so much an impact in valuations and deal structures, but deals today are more targeted. So it's less about a broad process and trying to reach as many prospects as possible, but it's more about identifying the right strategic fit because the capital is more selective. So the positioning matters more than ever. 2 years ago, you'd have a lot of people fighting. 3 years ago, 3 years, people fighting over the same deals, and now today, people are much more focused on what's right down the fairway for them versus operating on the fringes. There's less broad, at least we're seeing less broad auctions, more targeted buyer selection, and while process still matters, positioning matters more. And positioning the company in the right light and positioning it with the right parties is really how we're getting the deals done today in the current environment.
Yeah, thanks for sharing the example. Back to position and precision. So it makes a lot of sense. And I talk a lot about AI. We know that AI data, it's all going through major overhauls and shifts. And I think you shared with me that you're seeing that in insurance as well. Where do you see the biggest opportunities emerging over the next few years because of these types of shifts?
Yeah, I mean, 2017, 18, we had the insure tech boom in the insurance space, and that was hot, then it fizzled. But I think what you're seeing now is in insurance in particular, that data and AI are going to be major drivers. And it's funny because we're working on some deals now where clients are going back and or a buyer is going back asking for 15 years worth of data sets. And why is that relevant? You're not making operational decisions today on 15-year-old data, but it's relevant because new technology like AI can go back and parse that data and reevaluate that data and maybe create new opportunities because of where technology exists today that it didn't 15 years ago. So I think that's super interesting in how people are thinking about that. So I think whether it's in underwriting or distribution, AI and data in particular are going to be more at the forefront. And I think you're going to continue to see more growth in specialized niche products where traditional markets haven't fully adopted them yet. Things like parametric insurance are becoming more prevalent. Lots of different specialty type risks. We're working on one opportunity now, which is, believe it or not, it's hard to say. It's an insurance product that's never been done before. And we're getting ready to launch that. And a lot of that was available because of data. It's available to be produced now because of data. I think it's a bit of a structural shift. And I hate to lean in to say we're more tech enabled because we went that route and then it fizzled. But I do think now with AI and what's coming about, you can do more with that data versus just going back 5 years ago where it was smart homes would equal less claims for homes. Now you're really using data in a different way and it can be interpreted in a different way.
It's fascinating. And I guess the next thing is who can interpret the data in the right way and then harness it. But
Right.
it's fascinating. And I can see just from the little conversation here how it could impact insurance particularly. So thanks for sharing your expertise there. And I guess exciting times ahead for everybody. But believe it or not, Jason, it's absolutely flown by. I've had so much fun. We're moving towards the last couple of questions, just two more or so before I let you go. I believe that leaders are readers. And I guess it doesn't have to be books these days, right? There's so many materials out there and podcasts and the like. But are there any resources or books that have really shaped your thinking that you'd recommend to our audience today?
Obviously, read a lot of books about insurance, a lot of books about leadership, a lot of books about the market. And I think they're all great foundational pieces, but my career has been less about books and more about learning from clients and learning. I spend a lot of time looking at the deals that we've done, how they've gotten done, the patterns involved in those, and recognizing those across deals, but themes too, right? Themes in deals and incentives of sellers or buyers and their behaviors, the market cycles. Books are great and they're good reads, and they can teach you a lot about leadership and they can teach you a lot about the markets. But for me, the biggest resource has really been interfacing with clients and understanding them. And so what I've learned more from my clients in real world situations than anything else. And that kind of goes back to all the way to starting at a 3-person firm, right? You're in it. And I think all the time that I've spent doing, that's where I've really better understood my clients, their objectives, their incentives, and also what services you need to be able to provide to them. Maybe I'm less of the book smart, more of the street smart when it comes to this because of my particular career. But that's really where I think I take my biggest lessons from, is those real world experiences, from the tough situations like we talked about 2008 to technology, into the boom markets of '05, and when we had a lot of great business. And even the last 5 years have been incredible for the firm. I would encourage everybody to do some self-reflecting on their own book that they're writing, even though it may not be written down, because there's a lot of insight if you go back and think about how you put those things together.
Nothing wrong with street smarts and learning on the job. I'm a tactical guy from that perspective as well. And I think, look, there's a lot of reading I do, but sometimes it's tough to really implement what you learn in a book, right? So I can certainly understand your approach, and it's clearly been very successful. So back to that listening piece, right? Really using those 2 ears and leaning into what you're learning and hearing from clients throughout these processes that you're involved in. And I guess never waste a crisis, right? As we talked about already with the great learning opportunities. Last question, Jason, if you could go back to Jason really early on in his career, knowing what you know now, what's the one piece of advice you'd give yourself?
25 years ago, I needed somebody to sit down and tell me to have patience because I didn't have it. It's hard being young. Your focus is on execution. We got to get the deals closed. It's what pays the bills. Later, in the benefit of, I think, from maturity and from learning, is the value. I realized the real value is in judgment and relationships. So today, I would say, as I've matured, I stopped trying to close deals and start trying to understand the people. And once you do that, the deals will close. You'll develop the rapport with the people. You'll get the proprietary mandates. You'll have the credibility that they're looking for. So I think that's a big thing for me, is realizing that the value isn't just in executing deals, it's the judgment in relationships. And once you focus on that, everything else will follow.
Love that. What a great way to end this week's episode. Jason, it's been a great conversation. I think what really stands out for me is your long-term entrepreneurial approach, building relationships over years, thinking differently as you do about value, and creating a culture where people can truly grow. So thank you for sparing us the time, sharing your journey, your insights. We really appreciate it.
As I said, it was an honor, and thank you for reaching out. And this was a great time.
Thanks so much, and best luck for the next few months. This episode of the podcast was brought to you by the Investment Banking Leaders Club. And to keep leveling up your career, join the club at ibleadersclub.com for exclusive insights, leadership strategies, and career growth resources straight from the industry's top professionals. I want to say thanks to our key partner, Altrum, the global leader in financial deal gifts, awards, and recognition, for their ongoing support of our mission to empower both aspiring and senior investment banking leaders. I really hope you enjoyed today's episode. Thanks for tuning in. And until next time, best of luck on your growth journey.